Hello and welcome to the Sound Financial Group podcast. My name is Paul Adams. I'm your host. I'm the CEO and founder of Sound Financial Group. I am joined, as I am most of the time, by Corey Shepard, but today he is in an undisclosed location in the Pacific Northwest. Corey, can you hear us clearly from your location?
Loud and clear coming in from the field here, Paul. I was thinking we should have a little contest. Like, if any listener, any viewer, you probably have to be a viewer for this one. The podcast only is not going to work.
Unless somebody can recognize that bird. I hear a bird.
Right. Well, that's one of the clues. Whether it really is a bird or it's a soundtrack that we've placed to further obfuscate the truth. But I think anyone who is watching that could pinpoint my location within, I don't know, let's say 10 miles, they get a prize right into the comments.
I love it. I love the idea. Although, have you posted to Facebook at all where you are? I don't want this to be a laydown for one of your clients that's like just goes to your Facebook and sees it. So we're good on that. I say we even make it interesting.
Yeah.
First person to guess it in the comments. I will.
That doesn't already know, like that I didn't already tell.
Yes.
Or has been here.
Yes. Yes.
Mom, I'm talking to you, Mom.
So what we will do is we will send them a $100 Amazon gift card. Somebody gets that correct.
Yeah.
I like that.
Send a location that's within, I think 10 miles is a good
10 miles.
Fair. Yeah.
I like it. I like it. Corey, doing the first giveaway impromptu, didn't prepare me for it. I think I'm rubbing off on you, Corey.
I'm feeling all runaway right now. It's great. I love being the renegade one. It's exciting.
Speaking of runaway and renegade, we have a fun episode for you guys today.
It's a really great segue. Well done.
We are going to look at some of the stock predictions or performance predictions that were done earlier in the year. Now, for those of you that maybe didn't get a chance to watch these episodes, I think they're a hoot if you guys aren't checking it out on the regular. We sure do have a lot of back episodes to share with you guys. You can see, you could just scroll, you could get carpal tunnel just scrolling through our channel. I'd encourage you guys to give it a shot. But this is right from one of our episodes earlier this year where we looked at Dave Ramsey's stock advice. Again, It was a January episode. A lot of big beard on me. I'm not sure what was going on. But I will tell you, my back was stronger then. Yeah.
I am ready to go.
I think you look happy if I move forward 5 seconds, 10 seconds. Eventually you look happy again. Maybe you're not happy at all. Because this is the episode I also showed you memes. But
That's
anyway.
True.
We looked at the Jim Cramer recommendations that were made back in January. And there were 5 major stocks that he said these were big. We kind of joked about at the time. These are big losers from 2022 that are going to come back in 2023. And there's some rationale to that, right? Like if a stock has a negative year, it may be more likely to have a positive year the next year. But here is the big point about any of these stock recommendations before we get into how do these actually do this year. And then we get to have more fun that come January will encapsulate the full year of these prior recommendations. But what we're going to talk about today that your guru could have won and you could still lose, meaning their stock recommendations could have been on point and you might not have made the purchases at the right time. Or your stock guru could be dead on, but because you exited the positions too soon or you held them for a year and the return was so good, you're like, I'm sticking with it. And then you're there for the next year when that individual stock has a significant downfall. So that's one end of the gurus. Those are the gurus that are making recommendations to you. Then you have the...
Right, because they don't tell you, they say, here's the stocks you should buy this year, but they're not always telling you when exactly to sell. And I think that's one of the things we'll get into in just a few minutes that I'm excited about is, we're not all the way through the year, and we're just saying, like, what's it like to be checking in on this trade that you made earlier in the year and see, is this one up, is this one down, what should I do about how the year is going with these? It's a really tricky equation.
Yeah, you're exactly right. Because for every buy recommendation a guru makes, they don't exactly accompany it with a sell prediction. If you think about just in some ways, poor Cramer. And what I mean by that is every night he's got to get together, put together a show, and then he's got to talk about companies. He's got to say, this is one to buy, this is one to sell, this is one to keep if you got it, but don't buy it if you don't. And you do that 5 nights a week, it's pretty tough to then circle back. If you talked about, I don't know, even 4 stocks a show, that's 800 stocks you'd have to keep track of to then be able to come back, give the sell recommendation, etc. So the thing is that the guru could even have most of their predictions right, but if you didn't buy all those recommendations, or you missed one of their recommendations, or you missed one of their sell recommendations, or they never made the sell recommendation, then you would miss out. So they could win and you could still lose. So let's look at some of Jim's mix. Should I call him Mr. Cramer? Jim seems so familiar. So here are the big ones: Qualcomm, Lam Research, Micron, Airbnb, and Illumina. Illumina? Illumina.
Illumina?
I don't know.
Illumina?
To me, it sounds like they make aluminum cans. Okay, let's hit Qualcomm first.
Illumina. I like.
That sounded about right. Corey.
Yeah.
I don't think you saw any of these before. I flashed them very quickly. So let's hit our first one. Qualcomm, year to date. It started out the year at, so this is January 1 opening, $107 a share was it close on opening day.
Right.
Started at 111 and it's currently at 115.
But it was way higher early in the year. It's almost like the Cramer wave. Like,
Yes.
literally, if you look at February, it went through the roof. It is entirely possible that a bunch of people listening to Cramer and buying it caused that initial.
Yeah, let's see what the date of this
Run.
article was. Oh, that was a January article, but you're right. And those articles propagate the internet. We didn't, I don't think, find it till later in January. But you're right. There, it could have gone up. Now, your quote unquote better return might have been if you bought it right at the beginning and then sold it here. And for all we know, he might have told people to sell it there. That's
We
the
could
thing.
go and look. Maybe we're going to create the Cramer Momentum Index, where you buy everything he says to buy and sell it 1 month later. And how would you do?
Cramer Momentum Index, Sound Financial Group, TM. So, but you get a sense of it. And so you could have sold higher, or you might have missed his sell recommendation. We certainly aren't listening to Cramer for hours a day, 5 days a week to find out, but that's what you would have to do. Now, by the way, just think about that. If your aim is, okay, I'm going to manage my own money.
Huge.
And I'm going to trade individual stocks. Corey, wouldn't you think, let's say somebody was going to do that, wouldn't you think that an hour a day minimum would be the study time you should put in? If you're going to manage your own portfolio all in individual stocks, the minimum you should be doing is an hour a day.
I think the minimum could be more than that, but I'll go with it for definitely at least.
So
certainly not less.
200 hours a year, and insert what you're worth an hour in the marketplace. Like, that could be a really expensive portfolio management job, and we know from all the academic research that there is no evidence that any managers consistently or predictably even beat the market. So there you would be an active manager competing with people in great big towers with 8 screens in front of them, trading every day, only looking at maybe even a limited set of stocks versus you listening to Cramer in the evening for an hour, really digesting it and then executing the following day, would not only be a lot of work, but it probably wouldn't work because you would, for it to have worked, you would have needed Cramer to have said sell here or sell here, which would have been greater gains than before. But even then, you need to be watching that next day to figure out where you put the money you had in Qualcomm when you sold it. Oh, wait,
Well,
let's do.
from a financial entertainer standpoint, it's actually a beautiful system if you've told folks what to buy and then they are waiting around to see if you're going to say to sell it again. So they have to tune in pretty much every day to see it. Like that actually is a really great model for TV ratings or a podcast or a newsletter. Absolutely.
Reminds me of the new newsletter I was going to tell you we should release. Just kidding. All right. So now we've got Lamb Research. Now,
We've got it. The Cramer Momentum Index.
Cramer Momentum, CMI. Well, here is, so this one crushed it, Corey.
Crushed it.
This one is up a total of, gosh knows how, 75% ish. So it's about $400 a share. Now it's $700 a share. So Cramer, you crushed it on this one. Now, unless, now remember it says these are the stocks that are going to crush it in 2023. But let's say there was a sell recommendation from Cramer like right here. And for some reason, Lamb fell out of his liking. And it may not have traded. It may not have worked out. Next on the list.
And for the end of year, we're going to go back and look at some of those things to say, like, we'll, for the end of year encapsulation, we're going to kind of cover back for the whole. But, here's the other problem is so far we've looked at two picks, one that kind of did okay, but took you on a roller coaster ride, and one that was just a ramp up through the year. So, like, how much of each of these did he say to buy? Like, are you buying the same amount of each one? Because
he just
I
says
would have rather put more money into this one.
Yeah, that was me certainly as well. Well, here's the funny thing. So I just decided to do this on Lamb Research. Now, if you were a long-term investor in Lamb Research, and let's say you started at the beginning of 2022, I don't know what Lamb Research does, but let's say that somebody's impassioned about it and they decided they want to invest in it. Lamb Research just broke even from where it would have been at the beginning of 2022. Now, that I know of, he didn't recommend it back in January 2022. But here's the thing we would have all of you guys think about. If there was an individual stock trader who was absolutely crushing it, then what they would have, I would imagine on their website, is a chronicle of every single recommendation they've made, both the buy and the sell, and what your return would be. Or at least if they had an absolutely stellar record, nothing would drive ratings better for them. But if their record isn't that stellar, yeah. Now, the one I have seen, but it's about congressional representatives, because they have to disclose within, I think, 45 days any of their trades, and then you can go back and look at their purchase and sale dates and see their returns. Listen, there are some people in Congress that are making Warren Buffett look like an amateur on both parties. Wow. So if you get a chance, somebody does all of them, but if you go on Twitter, I think, and look for Pelosi stock picks, there's a guy that updates like the top 10 net worth people in Congress and their rate of returns.
And but it's not insider trading. It's not using any of their knowledge from everything that they're doing running our country.
That is what they say, but the funny thing is their returns haven't dropped because technically they're not supposed to do insider trading, but the congressional representatives have a very low likelihood of incriminating one another, and so they just kind of overlook the late trades or give them a small fine or whatever. So since they passed that insider trading, 4 years ago, there still seems to be something like that happening. But here's the point. that is a history of congressional stock trades that looks real profitable, and somebody has assembled it and shown it all. And that's what we haven't seen from these gurus. And that's why they could win, just because lots of people listen to their recommendation. None of Jim's recommendations actually have to, Mr. Cramer, sorry, too familiar. None of Mr. Cramer's actual selections need to work. If he keeps people listening to his show, then the broadcast company will continue to write him large checks. Period. He can win. And the stocks he recommends to you, or any guru recommends to you, can lose, and they can still win. All right, let's hit the next one. Yeah. Micron year to date is up from about 50 to 70. Now, almost every single one of these is a growth-oriented company. And it makes sense that if they had a bad year last year, and as the environment improves over the fear of last year and the sell-off, they're going to tend to do better. And we'll see if it holds up between now and year end. Next up is Airbnb. Now, Airbnb, despite all of the news about the rent apocalypse that is happening, especially around certain parts of the United States, the southern United States, bookings are way down. Airbnb's faring quite well. Because keep in mind, even the movement of these stocks is random. There could be some random piece of news that doesn't have to do with the fundamentals of their business that impacts their stock price. And then last but not least, the most fun to say one, Illumina. Illumina. In any case, they haven't hardly moved at all this year. Oh my gosh. Well, something bad happened today.
Whoa.
Holy mackerel. Is there news on this? Market fall at midday amid oil and interest rate concerns.
New CEO mid battles with investors.
Oh, okay. Is that down there?
Yeah, 3 hours ago.
Oh, I see it. Yeah. Wow.
Well, I'm glad we're recording this week versus last week.
Yeah.
Goodness gracious.
But now that's a $7 price movement. And keeping in mind, guys, like everything with your money is being marketed. You look at this chart. The chart starts at 161 on the vertical. So if it moved up by $7, it would look like an enormous gain instead of dropping by $7.
Right. So it looks like it went to zero if you just look at the graph pretty quickly. It's like about
yes. And it would look like it went to the moon had it gone the other way. Now, when you guys see this and you see like this stock drop, just think about that for a moment. Now, maybe this stock is going to end 30% higher this year. Maybe whatever that article is that we pointed out at the bottom about the CEO and a battle with all of their investors, maybe that actually turns out and the investors feel appreciated and a ton more people pile into the stock and it ends at 200. We don't know. Because that's the problem with buying individual stocks. When you buy an individual stock, now you're stuck making the decision or offloading that decision to somebody else. And the thing is that, we just talked about earlier, if you're just going to manage your own individual stock portfolio, an hour of concentrated study is the minimum every day you should be willing to invest. And that only increases the likelihood that you won't be too far below the market. But we have no evidence that you as an individual investor could beat the market, just like we have no evidence that Morgan Stanley could or Edward Jones could. Right? Right. That's the part that I think gets lost, Corey, on people all the time, is they think the discount trading firm and the Morgan Stanleys of the world, or, full service brokerages, are fighting one another. One is saying, you can't outperform, but our managers can, so use us. And then the E-Trades of the world are saying, basically, you don't need all that expensive an advisor. You can beat the market. But they're both operating under the same supposition that people, whether that's an expert in a building somewhere or you personally, can beat the market.
Right.
All you need is more information, is kind of how they market. Look at these charts and research. But the people that are making tens of millions of dollars every year, only looking at stocks and either making recommendations like a Jim Cramer, or managing the money like an investment manager, which we're going to look at ARK Investments here in a moment for Kathy Wood. And you don't know which one is going to work out. Make all the decisions yourself. No academic evidence that's going to work. Listen to the gurus. No academic evidence that will work. Or blindly put it in the hands of a guru, which is what I mean if you're investing in I would say just a heavily personality anchored fund like ARK Investments. You're offloading it to what their knowledge workers would say. Is that an okay summation of like the 3 ways people would go? And what we're saying is, can't beat the market. You need to own almost all of the market. You need to rebalance consistently, and you need to operate with your money like an endowment. Well, frankly, here's how we should be operating with our investment money. We should be managing it like we're managing it for somebody else. Like, Corey, have you seen the statistics on like the amount of compliance if you have somebody you're responsible for their health, whether that's a dog or a relative, and the compliance with medications versus if it's my medication?
Yeah.
Yeah.
Oh, and see, we got a clue here flying by that'll help anybody who's looking for where I am.
Hey, if you got that $100 Amazon gift card.
I think they cut the internet off on me for a second as they were clearing the flight path. One of the other things, well, I'll give you another one, Paul, which is in the film industry, generally the rule is you don't make a movie with your own money.
Mm-hmm.
Like someone's got a great script or a director has this idea, they want to develop this project. They don't, most of the time, very rare exception, they don't use their own money. They go and get investors. Not that they couldn't afford it, but it proves to the marketplace that this is a good idea. Like you prove to yourself that enough other people would want to invest in this project, that it's a good one. It's not just because you're too close emotionally.
Mm-hmm.
So with our money, it helps to, act like it's for someone else. That's a great point.
And then think about that. So what they've shown is like, even if you as an individual, the average individual gets something like an organ transplant. I'm sorry, I don't remember the total numbers, but something like only 60, like you just got a new insert organ here. And if you don't take these pills, that organ will die, then you'll die after. 60% compliance. If it's your dog, it's 100% compliance. If it's your child or a parent that you help care for, it's almost 100% compliant. So what we need to think about with our money is less about, oh, this is my money. I can take the risk. I want that gain. I want to chase those big returns. Instead, what if you were investing that money for your mom or your dad who are retired? They're 70 years old. That is who you are managing your money for right now as a 65 or 70-year-old that you have a promise to, that you've said to yourself someday in the past, I am going to have enough money to retire one day. And then, like we all do, we make decisions in the short term that don't line up with that because we're not relating to it like this is a different person. It is a different person. I'm a different person I was 10 years ago. I fully... like, God ain't done working on me. I'm going to have a lot of work done between now and 65. And I need to be managing for that man I've not met yet, who absolutely needs to have that money in the future, because I, and many of you listening, have a promise, not only to yourself that you'll be financially independent one day, but that at a minimum, our children will not have to work to support us during their prime years when they've got children. That is a commitment I am after keeping, but who has to live with me keeping that commitment or not is not me. It's that 65-year-old version of me I haven't met yet. And I may not have that much more in common with than the average rando I meet on the street. We'll find out, I hope.
Right.
Right? But So let's talk about that idea of, let's say you just handed it off and you went with one of the gurus, in this case, ARK Investments. Here is the performance year to date. Wow, something happened today. Oh, ARK Investments got some good
juice.
news on
Yeah.
Friday, it looks like. Let's see, do we have an update today? Let me just give her a little refresh. Let's see if anything happens. Went back to one day. Let's go all out. Yep, that's what it looks like now. Year to date, so ARK started at about 30 and is now at 43. So
Great.
great.
Good for Ken.
My money is up like almost 50%, 40 plus percent this year. Crushing it. Way to go, ARK. Now, do I just stay there? Because had I been there since the beginning of time, this is the part that's a little more sobering. That's pretty good return year to date. But if I go back, that's basically the same pricing I could have bought it for in March of 2018. And I would have started with $40. I would have ridden that all the way up to 150 and I'd be back at 40. So if we put that in perspective, Corey, that might be like I started with 100,000 and then I ended up at like just short of 400,000, like maybe 370 if I'm doing it in my head right.
Yeah.
And then you'd be back down to 100,000. Now,
this brings another point, which is whatever guru you're following, what magnitude are you investing in each of those funds? Because if you're talking like you put 100,000 into ARK or into Micron or something like that, well, now that's intriguing. But if you're putting $500 into each one of these picks, it's literally not worth your time to go for 100% growth. It's just not. So you're either not putting enough in to make that big of a difference, or putting enough in that if you're wrong, it could ruin you.
Yes. Well, and that I think that's a great point, Corey, because it does happen that people relate to it like, look at how good X, Y, or Z did. I'm just going to pick one of these, which one of them that did really good. Was it Lamb that did really good? Let me go.
Lamb was up.
Where do I get my year to date again? There it is. So Lamb crushed it up like huge percentages. But now the question is, to your point, Corey, let's say if these were $100,000 each, then that Lamb growth looks amazingly attractive. But then the problem is, after January, I put in $500,000 now, and let's say that was my investment capital. Well, I can't track the rest of his recommendations he makes. He might make better ones in February. I can't buy them until he recommends I sell these ones.
Right.
And so, but now you're still investing all this time, energy, opportunity cost watching the show. And if there's $1,000 in each of these, it doesn't matter. You're not getting paid enough for the amount of time you're investing on this like almost everybody out there. If you're studying the markets and wanting to beat the markets, you'd be way better off studying tax strategies, because that's something not everybody has access to. That's something where you could actually have a premium on your balance sheet. Studying real estate investing, something else where there's imperfect pricing. The problem is this stock market, like we just saw big jumps that just happened today because of information. It just happened today. Information that nobody watching the stock knew that news, which means new information, was coming out. Therefore, they couldn't have traded on it either.
Oh, and don't forget that if you are, making a sell and another buy within a year, you've got to outperform the 30% hurdle rate that the IRS imposes on making gains in less than a year, because that's short-term capital gains and that's income rate. So if you made a 50% growth, well, you're giving 30% of that back if you're trading inside the year. So
indeed,
that doesn't show up on the rate of return sheets.
Right. And all things that we talked about that are problems with following gurus, problems with trying to day trade, and they all get solved when you embrace, hey, I'm going to take all my learning and knowledge, I'm going to put that either into my career or some other area where I can get returns for it. Having an amount of information that is public and you know a lot more about Tesla than somebody else that doesn't give you necessarily a trading advantage. At least we have no academic evidence there would be. But you could have an advantage like that if you put that kind of research into your next house. You could have an advantage like that if you put that kind of research into the next tax strategy you're going to follow. Or for that matter, and for some of you out there who are not clients of Sound Financial Group, doing that kind of time vetting out your next financial advisor might be well worth it and produce a better return than certainly trying to day trade stocks. Track a guru, knowing that the more successful the guru is, it may have little to nothing to do with the success of the people listening to their advice. They can win while you still lose. And it's just our hope here at Sound Financial Group, as it is for all of our episodes, that you enjoyed this and it was a contribution to you being able to design and build a good life.